Good morning students. We are studying the first chapter of accountancy, that is accounting for not-for-profit organization. In the first year you might have studied regarding the profit-making organizations like sole trading concern, partnership firm, joint stock company. See, all these organizations are set up only for the purpose of making profit. They are undertaking certain manufacturing activity. They are undertaking business activity, that is conversion of raw material into finished product. So then these finished products are sold to the market where they'll get huge demand from the customer. From that they'll raise their fund, from that they'll make more and more profit. This is the way in which profit making organization performs its operation. There are so many profit making concerns, IT companies, manufacturing organizations, their goal is making profit. But whereas this particular organization, this is separate from that of the profit making organization. The name itself says not for profit, means these organizations which are set up not for the purpose of making profit. Then why these organizations are set up? Only making profit is not the objective of many people. There are people who want to help others. They are having willingness to help others. With that particular reason, they start this organization. I can give you the example like NGOs, that is non-governmental organization. What these organizations do, they collect fund from the donors, they raise funds through different sources, and this raised amount they'll use to help others, like providing shelter facility, food facility to the people who are abandoned, elderly people, children, etc. They provide facility, they provide education, they provide all other necessary facilities for them, and hence they help in uplifting their standard. These organization importance we can see in present scenario as the world is facing the problem of extreme pandemic. In this situation, these organization, from the raised fund, they use this particular fund to provide basic facility like providing food facility, health facility, etc. So there are not just the profit making organization, but there are also organizations which want to render service. So this is the reason why this not for profit organization are set up. Not for profit organization means organization which is set up for the purpose of rendering service, but not for the purpose of making profit. So this is the meaning of not for profit organization. So we'll study in detail regarding NPOs. It is a short form for the not for profit organization. So first one is introduction. So the first point is they are set up for providing service to its member and the public in general. That means why they are set up. In this first point, it tells the reason for establishing or setting up of NPOs. The reason is providing service to its member. Who are the member? Members are the one who subscribe to this organization. They are the people who are having the motive of rendering service. So these people contribute certain sum of money that is paid on a periodic basis, which is called as a subscription. By paying subscription, they become the permanent member of the organization. So first priority of NPOs to provide service to its member and then to the general public. So this is the manner in which the NPOs operate. They first give priority to its member. For example, trade unions. These trade unions protect the interest of the employees working in an organization. Suppose anything happens to the employee, maybe the employer is exploiting that particular employee, not paying proper wages timely. In such situation, the employee can complain to this particular board, that is trade union, where these particular unions will try to give justice to that particular person. So this is the way in which certain associations are formed in order to protect the interest of their members. So this is also NPOs. Then next, do not undertake any business activity. What is NPOs? You know, it is not started for the purpose of making profit. So when the objective is not for making profit means they are not undertaking any of the activity. So they are not undertaking manufacturing of activity, they are not converting the raw material into finished product, and they are not providing any product to the market. It is just a service which is intangible in nature, which we cannot see, but its effect can be felt by us. So that is regarding NPOs. Then next is managed by the trustees who are accountable to their member for the utilization of fund raised for meeting objectives. So here the management is looked after by a person called as trustee, whereas in case of profit making organization there is a person called as manager who manages all other his subordinates and helps them in achieving one particular goal, whereas in case of NPOs the management solely looked after by trustee. So the managers in NPOs are not called as a manager, they are called as trustees, and they are accountable, that means they are answerable to their members. If they utilize any fund, for any reason if they utilize fund, they need to give details of that particular utilization, for which purpose they have used, what amount they have used, all need to be communicated properly to their members, because there is no owner subordinate relationship, all are equal in an organization in case of NPOs. Then next, they maintain proper books of account to avoid misappropriation of fund. Even these organization has to maintain some books of account. Though profit making is not their objectives, but maintaining of accounts are very important. Why? Because there is a statutory obligation which is laid down by the government. In case the funds are given by the different outsider, they need to be answerable for them, how the funds are used, how the funds are utilized, in order to protect their interest, in order to protect the present members' interest as well as potential members' interest. They need to maintain books of account, and they are also maintaining some books of account like receipts and payments account, income and expenditure account, as well as balance sheet. So we'll study regarding which and all the organization comes under NPO. So here are the certain examples. First one is trade union. These are also NPOs where they protect the interest of their members in case of any difficulty when the employee faces in an organization, like not getting proper wages, exploitation, or at this particular time trade union protect their interest. So it is kind of service. It is not something a product is offered by that union. It is a service offered to its member. Then schools. Schools are those institutions which render service, which enlighten the knowledge of the student. So this one also comes under NPOs. Then charitable institutions where they provide shelter to the orphans, provide basic facility, etc. Then there are other religious institutions, religious organization. All these are the examples for NPOs. Next is regarding meaning. So meaning says it is established for the welfare of the society. So these organizations do not have profit making objective, but they have the objective of rendering service, improving the standard of living of the people living in a society. So this is their main goal. Then next, it functions without profit motive. As the organization is a service oriented organization, hence they are not having any motive of making profit. Their only goal or only motto is to provide service. Then they do not produce or sell goods and don't have credit transaction. It is understood when the organization is not undertaking any manufacturing activity, when they are not offering any products, so there is no chance of having credit transaction. In case of profit making company, there are small organizations which provide credit facility to their regular customers. But in case of NPOs, they are not even dealing with the product, means they cannot even provide credit transaction. Then next, funds raised through the members are credited to the capital fund. So what is this capital fund? You all have studied in profit making organization that a fund or the amount which is introduced by the owner to his business is called as a capital. So that particular amount is introduced by owner and he has a complete authority over that particular fund. But here what happens? Here every member is going to contribute something. That may be a donor, that may be a government. So there are different sources through which funds will be raised, and these funds will be added together, or they are capitalized, and they will be called as capital fund. So what is capital fund? We'll study in detail regarding capital fund. So it is the fund collected by NPO through subscription, donation, etc. So there are subscription which is given by the members to continue their membership. There are donations which are provided by the donor for different purpose to help this organization in raising fund, and there are government providing aids for different reasons, which is called as a grant in aid, to help the institution to raise its standard. All these are the funds which they raise, and together they will be added to a fund called capital fund. This is also called as excess of asset over liability. While solving problem, you will come to know regarding capital fund. Why? Because sometimes in a problem, when the opening assets are given, we need to prepare closing balance sheet. At that particular time, if the capital fund is not mentioned, we need to prepare opening balance sheet, where we need to find out the difference between the assets and liabilities. That difference amount is called as capital fund. That is excess of asset over liabilities. That is called as capital fund. So next, major source of their income. Through which source they are raising their fund. So let us study regarding their sources of income. First one is subscription. What is subscription? Subscription is a payment which is made by the member on a periodic basis for the purpose of continuing his membership. That means what? This is the amount which is paid by the member to NPOs, and it is on a periodic basis. They make a regular payment annually or monthly. So in this manner they raise the fund. So how this particular item will be treated? I'll tell you in detail. Subscription is a receipt for the organization, correct? As a NPO is receiving this particular fund from whom? From its member. Hence it becomes a receipt. In case of receipt and payment account, it will be recorded under receipt side. So receipt side is a debit side. In case of income and expenditure account, it is recorded on the credit side as it is the income. How they are treated, we'll study in detail while solving problem. So next one is donation. What is donation? An amount which is received by NPO, which is given by the donor. So sometimes these funds will be given for specific reason, or sometimes it will be given for general purpose. What is given for specific purpose means they'll mention for what reason they are providing fund. For example, there are NGOs which are protecting the children from child trafficking. That particular organization, there is a donor who has provided fund by mentioning that this donation is for constructing of building. So the fund was given for the construction of building. So this particular fund need to be used only for the purpose of constructing building. So they cannot use that particular fund for other reason. So while recording in this financial statements, there should be a proper mentioning of those particular items. So donation, when it is given for specific purpose, means it becomes capital item. In this particular problem, we have two classification of item. That is, one is revenue item, another one is capital item. Revenue items are those which are generally recorded in receipt, payment or income and expenditure, whereas capital items are always recorded in either in receipt and payment or in balance sheet. So they do not have any entry into the income and expenditure account. So revenue items are those which are recurring in nature. What is recurring? That means they occur again and again. Capital items are those which are not recurring in nature. Their benefit is once in a lifetime. That means I can give you example of revenue items. In revenue item we have two types: revenue receipt and revenue payment. What is revenue receipt? Subscription can be called as a revenue receipt. Why? The subscription is received annually or monthly. So organization receives it regularly. Revenue receipt. Revenue payment means payment of payment of rent. An organization, if has taken a building on rent, means rent need to be paid regularly. So it is kind of a expenditure, and that is recurring in nature. So revenue expenditure. Whereas capital item, whose benefit remains for a longer period, that means it lasts more than 1 year. Maybe investment which is made on building, because if the investment is made on building means that particular value of the building increases every year. So it is kind of a capital receipt. Capital payment means interest need to be paid for the loan taken. So interest need to be paid regularly. Interest need to be capital expenditure differs than this capital receipt. The next one is grant in aid. What is grant in aid? It is the assistance which is given by the government for certain organization for the purpose of helping them in achieving their goal. So next, income from investment. What is income from investment? Sometimes an organization may invest in certain avenues. Maybe it is in investment on building, investment in securities. So at that particular time they are going to get certain benefits which is called as a return on investment. So that also becomes a source of fund for the NPOs. So next we will study regarding their financial statement. They need to prepare financial statement to fulfill statutory requirement. So why they need to prepare financial statement? So they need to satisfy the government. They have certain setup. They have laid down certain rules. So they need to fulfill government obligations. Next is regarding characteristics of non-profit organization. So what and all the characteristics or what and all the features of this non-profit organization? Formed to provide service. As you all know, this particular organization do not have profit making objective, hence it is started for the purpose of rendering services to the member, to the people. The next, organized as a charitable trust and society. These organizations are called as charitable trust or charitable societies. They are not called as a dash and dash company limited. They are called as trust or societies as they have a motto of rendering service. Subscribers are called as members. Who are the members? People who pay regular subscription to their organization to become permanent member, they are called as members. Then affairs are managed by executive committee elected by members. All the management, all the affairs are managed by whom? Executive committee, and they are elected by whom? Members. Then next, donation, legacies, etc. are the source of income. You have studied regarding the source of income. They have different source of income like subscription, donation, grant in aid, legacies, etc. So what is legacies? Legacies are the amount which is received by the NPOs as per the will of the donor after his death. So what is this? Means after the death of the donor, as per their will, they are going to receive certain amount which is called as legacies. In schools you might have seen they have reserved the fund on the name of their founders. The funds for funds to provide financial assistance to the bright students. So these are called as legacies. Then funds collected are credited to capital fund. So whatever the fund they raise through subscription, legacies, donation, etc., they will be added to capital fund and it is recorded under liability side of the balance sheet. So next, surplus is not distributed but added to the capital fund. You know that in case of profit making company, when an organization receives profit, that will be distributed among its shareholders. But here, if the surplus they obtain, that means excess of income over expenditure, means that surplus will not be distributed among their member. That surplus will be added to capital fund where in balance sheet liability side. Then next, goodwill based on their contribution to the society. How an profit making company makes goodwill? By satisfying their customer, by providing the goods as per their needs. In this manner, it tries to make its name among all other business. Goodwill helps them to get more and more consumer. For example, in case of notebook, Classmate is the one which is having good goodwill. That means it is having a good name, fame, because of which students prefer to buy that particular notes. So goodwill is an indicator and goodwill is a kind of plus point to the organization that they can earn more and more consumer and more demand. Whereas in case of NPOs, their goodwill depends on their contribution to the society. Like People can say that there is a NGO which works continuously for the benefit of the society. So in this manner, their contribution is indicated to their goodwill. Then accounting information are meant for present and potential contributor. Why they are preparing accounting information? As the members are there who are contributing to the society with the objective that they'll help others. So at this particular time, it becomes very necessary for the NPOs to satisfy their existing members. So through preparing financial statement, they can show that their hard-earned money is used in uplifting the society, uplifting the backward section of the society, providing basic amenities to the people who are in need. So in this manner, they can satisfy their existing members as well as they can grab new members. So this is regarding the characteristics of not-for-profit organization.